Hi, this is Randy Finney with Right Side of the Chart, and this is an end-of-day update for Thursday, October 17th, 2019. We'll do this one a little bit different. We're going to keep it for subscribers only because there's not a lot to cover in the broad markets today. We had another virtually flat day, I should say. Only up about a quarter point in QQQ, and I think a little less in SPY, so that's pretty much non-event. So we're going to focus on right now at least where the opportunities are to make money. It's hard to squeeze water from a rock, blood from a stone, or extract much from a market that is only up a quarter point without a lot of big intraday moves. But I will start there because that's what I do every day. We look at the markets. QQQ is flirting with the bottom of the midpoint of the price channel there. Again, you can see it here without all the other lines, the yellow line there. So we'll still look for I think a likely move down. We do have that downtrend line resistance we continue to fail at. So you can see we stopped there again. We tried to pop it today at the open, couldn't hold above it, traded below it all day. So maybe we'll run to new highs. Again, I don't see a market taking off anytime within the next couple weeks with all the big market moving stocks due to report. Again, barring any huge unexpected headline. Likewise, I don't see a lot of downside. But if something happens, certainly do some updates. And there's that the potential pullback target is the top of the gap right here. We have this big gap from last week, and that comes in now a little bit above the top of the channel. So let's see what happens there. Still have those divergences, small divergences in place in QQQ and SPY. SPY 60-minute chart right here. And so that's it. Not much else to report on that. Let's look at the futures, including small caps, real quick, and then we'll roll into the trade ideas, individual stocks and sectors. All right, so this is the QQQ 60-minute chart. I'm sorry, NQ, Nasdaq 100 futures, and again, probably what stands out the most. Why my convictions aren't very high on it. As far as jumping on it for a trade, I have a mild short position that I've taken in. We'll add to that if QQQ can break down here, NQ. But again, that's just a small position and probably being forcing. I don't want to say forcing the trade because again, I like these 60-minute divergent highs. I put a lot of faith in them. More often than not, they're going to play out for trend reversals. So again, I'll just keep it light for now. And here's the trend line to watch. I pointed that out this morning right here. This minor uptrend line. When we dip below it today, if you look closely, we hit the that support level I had just below at 79.26. About 79.26 or so right there, and hit it on a couple candlesticks. These 60-minute candles snapped right back above, and each of those candles, I believe, either closed right on or above that trend line, and so NQ continues to respect that trend line now. So that's kind of what you're doing. You're wedging up here with negative divergence, and that's why I think it's maybe a small position there. But again, I don't expect fireworks until the big fangs report in the next week or two here. ES. Similar trend line. I'll have to zoom in a little tighter. This is a 60-minute chart of ES. Let's clean that trend line up a little bit. There it is right there. And so we're kind of bouncing up along here as we continue to wedge higher. There it is. I'll update those divergence lines now. So we continue to inch up very slightly. So like I said, not a very powerful trend. It's losing momentum with this downtrend. So if we break these minor uptrend lines on both the ES and NQ, that could spark a correction. It could morph into something more. Again, these are pretty big divergences. Take it for what it's worth. We'll keep an eye on those. And then small caps. Here's a nice little wedge here. 60-minute rising wedge, complete with negative divergences right here. You can see there's your uptrend line for RTY, small cap futures, and your negative divergences, which are pretty solid. Even if we inch up a little higher, somebody asked today, Randy, would it be a good idea to, would it be an objective entry? I think they asked around 1555 or so. Well, I have resistance up here, quite a few. You can see several resistance lines. So I call this a resistance zone, and I'd be surprised if IWM or RTY, which is IWM is just the ETF, if you're trading the ETF. I'd be surprised if it punches through there and keeps going. It is possible, but right now you have that 60-minute divergence. You had the downtrend line here. This was bullish last week before last. We broke above, back tested. That was the last objective entry I saw and took on RTY for the long side, and so now I'm eyeing that for a potential short here, at least for a pullback trade. And there was your big divergent low that really set the stage for the current rally right here. That was our positive divergence at this low, and we've been stair-stepping higher since that divergent low back there. I'll update natural gas because that's still an unofficial trade. I don't have this one on as an official trade, but it's still in an uptrend here. I can draw this trend line, either come at those lows right here. I think I cut it in here. You catch more reactions. So there's a trend line to watch. We broke down last night, back tested this trend line, but we still closed the day positive today, up so about 0.7% on nat gas futures. And for those of you in the UGAS, which is still an unofficial trade, but still looks good for now. We survived the inventory report today, so UGAS was up 4%. After breaking that trend line on the 60-minute chart, you had a little correction, but still in an uptrend for now. And remember, most importantly, we're coming off this pretty big divergent low. PPO's in bullish territory. I think people got a little too bearish on that gas, talking about a surplus natural gas sloshing around, everywhere. And we'll see. But again, I don't try to spend too much time trying to process the fundamentals. Let the charts be your guide. Right now, this one still looks okay, and we already hit that 1465 target I pointed out the other morning, I think, when it was hit. Yeah, I did. And so that gave you an opportunity. That's why I list multiple targets. Each level is where a reaction's likely. So you ran up, broke out of the downtrend line, that little pattern there, put in the divergent low, hit the first target, pulled back, and so hopefully it'll continue coming up here to the next target here. And right now at this point it should stay, I think, above the $13 level. That is pretty good support all the way across here, and anything much below there, if you're still in it, you might want to consider a stop not too far below 13. And GBTC, the Bitcoin trust, similar to an ETF that was added as an active trade yesterday, was up today. It was up almost 5% at one point, but still looking good. It gave up back a little of those gains, but it still closed positive, about a little over 2% on the day. And so this bullish falling wedge pattern is forming up. And I'm not crazy about the upward trend line because we don't have a lot of reactions on it yet, only a couple there, but we'll watch it. So and I put a chart today. The lines aren't on this chart. I'll give them to you now. There's an update on the front page. I shouldn't probably spend too much time here, but that's it. It had two resistance levels right there, and that's pretty much that first one. I guess we were at that or close to it when I posted it earlier today, the update. And so that's to be expected. You pulled back at resistance. If we can pop above that, pretty much today's highs, that opens the door to this next resistance level, which also comes in right around the trend line. So if this one continues to play out as I suspect, tomorrow hopefully we take out that 925 or so, 926 level, come on up, maybe a reaction on the trend line. If not, I'll welcome that and run up here to that first target about 1046, probably get a reaction there, and then I'd be out of that one. I'm just looking for a counter trend trade on this, and again a bounce off my long-term target here. I've been calling for a while, that 25+% drop to the 882 level. Very solid support on GBTC, the Bitcoin trust. And then I have I shared the chart of the Bitcoin futures, which we'll keep an eye on that. This is a 2-hour candlestick, 6-month chart. We'll zoom in a little tighter, and you can see the pattern in play here. First of all, is this very good. This is that comparable support level right there that I showed you on GBTC. So you have a support zone that we fall into. It was support back here. It's been support recently. Ideally, you need to keep above here, especially those recent lows. You have a minor downtrend line here. It's forming this small triangle, like a descending triangle pattern right here. Pop above that should do the trick to get us up to about 86, 85, and most likely get a reaction there, and then final. So this chart meshes with what I showed you on GBTC. They're going to trade similar. And there's your downtrend line. It comes right in with that was the level, again, when we broke that, when I did that chart a couple months ago on looking for a 25% drop in Bitcoin. That was the same level on the futures that needed, I said, if we broke, and it did. Look at that. It almost hit that target in one day. I mean, waterfall sell-off. And it's just a great example of technical analysis, and also confirms that as an important level. The fact that we didn't just limp on down and up, back up and around, meander around that level. When you see a well-defined support, the more reactions the better. Like I say, a blind man could see that level if you knew technical analysis. It's hard to miss that as an important support level. So therefore, when it broke, since all eyes are watching it and so obvious, you get a lot of sellers come in, and that's how technical analysis works. All right, so we need a little more work to be done. Those downtrend lines, those near-term ones, and GBTC and BRR need to be broken. Otherwise, like any trade, if it doesn't pan out, if it starts moving lower and takes out those recent lows, that's not going to be a good thing, and we let it go. Okay, and we'll just hit on these, and then I'll get to the pot stocks. Pot stocks had the most movement today, and as I'm sure you guys have seen, I've put out dozens of unofficial trade ideas, and I think 3 official trade ideas out there now on the pot stocks. Before I get to those, and they also fall into this larger sector industry, which is the specialty and generic drug manufacturers. I did a video on this just the other day, also covering about 3 dozen stocks in this sector. Some of those were cannabis stocks, and I want to update it because I like the charts, and I continue to see momentum, another 2% gain in the sector today, and have a nice, clean, well-defined downtrend line there, this triangle pattern, and if we can break to the upside, there might be a lot more room to run. Otherwise, a downside break, that too could be bearish. So we'll continue to monitor these. I'm not going to go over all of them, just a handful that stood out today. Again, all of these were covered in that video the other day. Just posted, I think, 2 days ago. MNK, Mallinckrodt, that one was highlighted in there as an objective buy here at the 220 support, and or with a next buy signal coming to break the trend line. So congrats to those that took that breakout today. The stock is up 14% on the day, and it just broke out. So if you're wondering, is it too late to chase it? I don't think so. Momentum's in the sector. I mean, the markets are closed now. You're going to have a little bit of resistance right here coming into play. We need to pop above that level. So that's really your next objective buy point, above out 270. And I can see this one coming all the way up here to that same target I should have highlighted. I believe I highlighted yesterday, about 417. Close to a double on your money if it gets there. And like anything, the ones with the highest return potential tend to also have the highest downside and risk potential. It's just the nature of stocks, so keep that in mind. AKRX, Acorn Inc., another one covered yesterday. It's now hit my first target today, 457, continued on through there to close at 470, up about 14%. And again, that one was an objective buy yesterday. You had a breakout back test recently, and it was still above the downtrend line, and looks to me still has more room to run. Maybe, again, depends how much momentum is in the sector, how long this continues, but I could easily see this one coming up here to that 726 level. So a lot of potential meat left on the bone on these guys here. 56%. That might likely have to tail the broad market holding up. If we get a big dump down in the next few weeks here, especially after the FANGs report or anytime soon, and especially if we break those longer term supports that I've been focusing on the weekly and monthly charts. I'm talking on the broad market. The S&P 500 will drop. Healthcare is a component, one of the 11 sectors in there, and so although these are maybe not, a lot of these might not be in XLV, the healthcare ETF, they're a subsector of healthcare, and they'd probably face a headwind. Not all of them, and that's one reason I'm more comfortable trading this sector right now, because again, they're not all components there, and some kind of march to their own drumbeat. Teva up another 11.65% today to that 766 target to close a little bit above there. Still looks good up here to the downtrend line and or that 965 level. And then IGC was the only other one I wanted to highlight today. Tried to pop this one, like I said, speculative because it's a small low price stock. Coming up on that 84 level it recently hit. Very nice, well-defined support level, and tried to pop today, intraday, just like here, but it couldn't. So watch it tomorrow. If it can pop above, usually what I've noticed, if you get a fake false breakout, and again, we never had a confirmed signal because we never closed a daily candle above there, but usually if you get one, it either fails and then you continue the downtrend, or if you break out the next day or anytime within the next few days here, few trading sessions, usually that second breakout will stick. So there was a little check today. There weren't enough buyers on the other side of the trend line. Keep an eye tomorrow, especially if you see increased volume. Volume was pretty decent today, and again, the stock was up 10%. So what it did, that 10% was up quite a bit more during the day. That parked us right on the downtrend line. And it's also bullish when a stock that's dropped below $1, if it hasn't traded too long below there, if it can regain $1. Why? Because they face delisting. If many of the exchanges, if your company stock trades above $1 for an extended period of time, you get a delisting notice. They say so if you don't get your stock back above $1, then you're going to be delisted from our exchange. So what they'll do is pull out all shenanigans they can do, insider buying, whatever else, reverse split, whatever it takes. Now the reverse split's just it's not really technically increasing. You reverse split it, you're going to have more shares or fewer shares, I should say, at a higher price. So, but again, buyers will come in for that reason when a stock regains $1, because now the company's a little bit better sounding if they're not facing that delisting. So it's just a level to watch. Okay, and I told you I'd get to the pot stats next, but I don't want to forget these other things, because I'm a big proponent, even though I'm harping on those lately because I see potential and some momentum. I'm a big fan of spreading out. Don't put all your eggs in one basket. Spread your bets, and sometimes concentrated bets. Like if you have everything in pot stocks right now, you had a good day today. At least most of the names I highlighted, even though some of those haven't even yet broken out, others have. So, but however, that cuts both ways. You have your old portfolio or a good chunk of your portfolio in that, you're going to either be very happy or very upset. So, slice up the piece of the pie, and I remain, bullish on the bearish on the U.S. dollar. Now I focus a lot on the Euro futures. E7 is a Euro futures, beautiful price action since the breakout. I was highlighting that back here. We had the breakout here, number one breakout. Right there, where's my circle tool? Breakout, back test. We've been walking up this trend line. Then we broke the more important longer term trend line that comes in here. Beautiful 2 back tests, and boom, off to the races. Also another hit of this uptrend line, and this continues to advance. That's a euro. Now, what I may add, and I've shared targets for you guys on a couple weeks back on FXE. I posted a chart with a 60-minute chart of FXE, and it broke out above the same downtrend line. This goes back for a while. If you don't trade futures, you can trade these ETFs and ETNs that hold the currencies, or invest in the currencies. And then you have the same option. This is again almost, I mirror that chart of E7 I just showed you, and it continues to play out the same. It's already hit 1-2 second price targets, on the way to the third right now. And somebody asked recently, and I've shared my thoughts, to me this is more of a potential bottoming play, a major trend, potentially major trend reversal. So at this point in time, although I've laid out some near-term targets, I'm looking for, and think we may see a major top in the U.S. dollar here. Now I wanted to share something that I really haven't talked on lately. A lot of the gains or the losses in the dollar. I've talked about this. Euro is by far, without a close second, the largest component of the dollar index. I think it's a 57.6% weighting. I'm going from memory. Behind that, you have the Japanese yen, then all the other currencies. You have the British pound and everything else. So you can see, and I've done extensive analysis. I don't want to get into the long-term analysis. Just go to the use the search by ticker, select ticker, click on resources in the top menu, go to the bottom of the page, and then take that drop down box or select ticker and type in either $USD, UUP, and they'll all give you the same thing. Now where I'm going with this is probably the best proxy, I may add it as an official trade if I decide to do so soon, would be UDN, the inverse dollar ETF, more so than playing along in the euro. I was looking at the euro because the chart was clean, and another reason, but a lot of the strength in the dollar recently has been on the British pound, with positive talks on Brexit. Now the reason I haven't focused on this, and I'm not trading pound futures myself, is too volatile. Those you guys have followed this. It's been years now. Everything's going good. They're going to come to an agreement. No, fell apart. Theresa May tried to get that whole thing going. Boom, that failed. It's just been a mess over there. And I live on the other side of the pond, so you guys might follow this closely. But to me, it's a crapshoot. Yes, that's been the more powerful trade recently, but this thing can go the other way all of a sudden if it's no deal. It's off now. Things aren't looking good. So where I'm going with this is, this is also driving the strength down the dollar. You can certainly gamble on or trade that. There's ETFs and ETNs for the pound. But again, if you go UDN, you're hedging your bets. Consider it like a mutual fund because you have the entire dollar index. So when you go buy UDN, you're shorting or bearish bet on the dollar, which in turn means at the same time you're doing a bullish or long bet on the euro, number one, about 57% of your portfolio of this, but then the yen and the pound in there. So you have it all mixed. So maybe one of those currencies or two or three are doing well, they're rallying, and one isn't. So that's why I just wanted to say that it's a little bit safer play if you like me think that the dollar at the very least is poised for some near-term rally, a trend trade or swing trade, and possibly a longer-term trend trade as well. So enough on that. You can see targets too, and I've already shared these targets. Again, type in, use that search by ticker box in the resource page. I might add it somewhere on the site, on the side or somewhere where it's easier to access. And then in that way, if you're new to the site and you didn't see my analysis on the dollar, you can then go and find that, and you could see these targets too. I think I already shared this. Might have been in a video, I'm not sure. Okay, and that brings us to the marijuana stocks, and then we'll wrap it up. MJ, nice, clean so far. Look at this. Nothing huge, but this is an ETF, mind you, so it's not going to explode, 10, 15, 20% in a day like individual marijuana stocks can and often do. So it's a pretty decent advance for the sector. And what it's also done is this is that daily downtrend line on the daily chart here. And yesterday we broke out, but it wasn't impulsive, and we closed right back on the trend line from above. Today we put that trend line clearly behind us. We have the bullish PPO crossover, and volume was nice as well. So a couple check boxes there. Not the most impulsive breakout, just a tad more work to be done, but this is an official trade. And I did post that on the site in the trading room, and I did that under today's post on MJ. I first posted it as a trade setup with a buy trigger over 20. It took that out, not by a wide margin. It took it out late in the day, but it is an active trade. If you didn't take it today, then you'd want to see tomorrow. Ideally, you want to see it build on today's gains, and also ideally, stay above this trend line. So there's your stop. There's your trade parameter. Stop, entry price, what it is now an official trade, and again would still offer official entry anywhere around here. You just don't want to go long right before the first target because you may get a reaction off there. I also think whereas I list multiple targets because those are areas where reaction's likely on the initial tag. I do think that this time we may blow past T1 if we get some more breakouts. We're very, very close on a lot of the big major cannabis stocks, Aurora, TLRY, Canopy Growth. So if we get those breakouts, in fact Aurora broke out, I'll get to that in a second, then there'll probably be a lot of momentum. You'll start to see shorts getting squeezed out, momentum players jumping in. You may blow right past T1. I just want to mention that. And at this point in time, I'll just be clear, this is my preferred swing target. I don't plan to take profits if I see a little more evidence when everything I covered in today's video, what I want to see on these guys. ACB, there it is, triggered a entry, what was it, on 380, any move over 385 I think I said, so 386, either way it's triggered, and you can see here it broke out. There's the downtrend line, which I had revised in today's earlier video. Breakout above both downtrend line resistance as well as that 384 price resistance level right there. And so ideally we get some follow through. Am I crazy about the fact we only closed a little bit above it? I mean, don't get me wrong, it was a nice day, and I've told you this one and quite a few others. I've already taken starter positions on this stock, so I'll take the almost 8% gain on the day. But it would be at this point, if these guys are going to break out, I think you'll start to see the upside momentum accelerating. And I get a lot of questions lately from new members. Options, I don't I've said this many times. I am not a big fan of options. I've traded many years. I used to be a stockbroker. I'm very knowledgeable on how they work. My experience hasn't been that great. Now, I've never invested a lot of time on the paired trades, which is really what you should do. A lot of retail traders just buy them naked. They buy puts and calls. Paired trades will quantify your, and limit your loss. They also limit your upside potential as well. With all that being said, so I don't have the time to study a stock and study options chains and theta and delta and all this other stuff and try to figure out the best strike price, the best expiration date. But I will tell you, and you can ask, I'm glad to tell you on a trade, and like this one, this is where I'm going. I think that if we see a little more upside here in these stocks, it'll be quick. And that's what I was trying to tell you, and I've shared that in a couple of replies lately, that I think if I were to be going with options instead of shares on these, I would take probably 2 months out. I wouldn't go out much more than 2 months, because I think these either pan out soon or it fizzles out and the downtrend continues. So therefore, I wouldn't go out 4, 5, 6 months or more. I'm looking at these as tactical counter trend trades. Get in, get out. Wham bam, thank you ACB, and that's it. So there's my maximum target. We'll kind of assess as it goes. Right now, that's like the sweet spot right there. I think we'll get a reaction. I'm pretty confident we'd get a reaction, the first major reaction off this 461 level right there. So if you're looking, you're an options trader and you want to get in, get out quick, that's probably not a bad place to go. But we'll just have to see if the rest of these stocks start to break out, we get some volume coming in, how things look. Like I say, I like to assess the charts as they develop, and as of now, that's what I'm thinking. So if I'm right on this, we can hit those targets in just a few trading sessions. Probably hit that one by next week. Again, that's just my guess from where we're at. Looking at the charts and trading these stocks for many years and knowing how they go when they go. So you're talking 20% pop in a week or so if we get it, possibly more, and maybe not. Like anything, don't get married to it. If it doesn't work, have your stops and let it go and move on to the next one. CGC, Canopy Growth, just close. Not really what technically a breakout. Well, let's see. Let me tighten this trend line up. No, not even. So I have to clean that trend line up. What I'm doing is just coming in, capturing those highs. So close right on the trend line. I mean, it's like I said, these things are poised to pop. I made a little comment. I feel like all day, like just taking my fist and tapping the monitor a few times. And like the picture used to freeze an old picture tube TV for the folks that remember that, and you hit it and kind of the picture would come in. Because these things just need a little nudge. If they can pop through there, CGC, you have a breakout. And traders should start to come in at that point, and you want to see impulsive trading. You want to see volume begin to increase. Another nice thing here is, I didn't mention this before, so a lot of these stocks appear to have a potential selling climax. Don't know if you can make out my volume bars here, but you can see, and you can replicate on yours, a big surge in volume. After a long downtrend, if you see a stock suddenly have a pretty impulsive final leg down, or a leg down, well, time will tell if it's a final leg down, but if that occurs on very high volume, that is what quite often is referred to as a selling climax. It's just those that have been holding CGC and these pot stocks finally can't take any more pain, starts going down, they all puke out their, the last of the weak-handed longs puke up their shares. And what it does is, sorry to sound crass if you've been in these stocks, on the long side, it washes out the weak hands and it changes and gives you a new set of holders in the stock. People that have come in and bought more recently, and they're okay. And then that kind of sets the stage for, in this case, it's a 60-minute selling climax. I'd have to look at the daily chart, but it does set the stage for at least maybe a near-term rally. We'll see. And there it is. So that's what CGC needs to do. Pretty much a pop above today's highs is what it needs tomorrow. Not just at the open. These guys can sometimes pop at the open. You want to see it throughout the day. And again, you'll know it when you'll see it. These things will start to move up 5.25% today. If it follows through tomorrow, my guess it'll probably be up 10% or more, 8-10% tomorrow. And maybe, heck, wouldn't surprise me to see it hit this next target here. That's that's about 10%. Could hit that tomorrow. All right, so that's CGC. Let's not spend too much time on it. I've covered it in the video. There's your, downtrend lines, additional targets. And what else did I want to cover in that sector? I've covered Cron today in the video. Popped already hit that 10, needs to get above 1064, still above the downtrend line. I just covered ACB. I've already covered this one in the video earlier today. There's CBWTF is yet to break out, so there's one still objective to buy it at support there. Again, that was already covered. Emerald Health would just not my favorite chart, but just one that's likely to catch a bid with the rest of the sector if they do rally. Same with Hexo. And I already covered CGC, OGI, broke out, continues to run up another 8.5% today. CTST, I already covered that, already hit my first target today, pulled back, and like I said, some objective entry on the pullback, and with the next buy signal to come on a break of above 161, probably take this one up here to about that 246 level, and that gives it about 80% upside from where we closed today if it gets there. TLRY, nice looking chart. And again, this is one of your big ones here, so you want to watch, like I said, CGC, ACB, TLY. These are some of your bigger more direct plays in the cannabis sector, and so if these all break out, then the chances are that the breakout will stick. And this chart's pretty constructive. This is a daily chart on TLRY, and that's positive divergence right there, about to be confirmed. So it could be more than just a quick trade, but I will say this: if the stock hits this target zone, that's a 51% rally up to the top of it, about 40 or so to the bottom. I would not only get out, I'd probably be shorting the stock there to reverse it from a long to a short, from a long to a short, because that is a very solid resistance level that I'm pretty sure the buyers will step out and sellers will step in if it gets there. So that didn't work. I'm trying to draw up and down like that. Alrighty, that's it. I won't go through the rest. They were all covered today and a lot of those yesterday. I just wanted to update and again kind of impress the point that we've seen a little bit starting to break out, but not that like absolutely yes, the sector is broken out. A little more upside follow through tomorrow could and should do the trick, and if not tomorrow, over the next week or so. I mean, we could pull back down and these can consolidate a little more, but again, keep it very simple. Much above today's highs in these stocks, especially these big leaders, and MJ should likely do the trick. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.